The financial crisis of 2008 never ended. In fact, if we look at many of the indicators, we see that it is actually getting worse. The global economic collapse is accelerating. You came here for the truth, so let me unveil that for you. Let's look at Russia right now, where we see the Russian reserves declining to multi-year lows. In fact, going back to 2009, where we had the deepest point in the recession. And of course, they have about 400 billion of them right now. And I would say that a portion could be, US denominated assets that they would want to get rid of anyway. So perhaps in the long run, this will not really put a damper on their economy. But it is to be seen what's going to happen in the near future. Let's get into this right away. Russia's crisis has no end in sight as $50 oil looms, says the OECD. This article is out of the Telegraph, and it says Russia is moving towards self-sufficiency in the face of falling oil prices and tensions with the West that have left no end in sight for the country's economic woes. I would just have to say that we are in an area right now where we see the falling oil prices really putting a damper onto the ruble, the Russian currency. But we have to really realize that they have put steps in place that are really there to lessen the harm that this causes. So we'll have to look into it further and see what happens. Let's move on right here. Again, out of the Telegraph, oil plummets after Saudis say $20 crude is possible. Saudi's oil minister has sent oil prices tumbling below $60 a barrel by ruling out any cuts to production. Now, the $20 barrel of oil is something that I covered previously, so it seems like this is a number that actually could be a possibility. Now, we had approximately a $35 a barrel only a few years back, and that obviously hurt countries all around the world. But if we would expect the same things to happen now, we could very well end up in another financial crisis. This is interesting to look at when you see how globalization works and how one commodity as important as oil could affect everything in the whole world. Let's move out into China and see China easing rules to boost lending. This is out of the Wall Street Journal. Whenever a country is in fact having a problem, they don't try and fix it, they try and cover it up. So we see China right now, their central bank relaxing the calculation of banks' loan to deposit ratio. This is a huge mistake, obviously, on their part, but they need to do this in order to get things moving. Whenever you have a crisis, never fix it, just have a band-aid handy. China is relaxing a major restraint on banks' ability to use deposits to make loans. This is when you know there's a crisis. We saw this back in the Great Depression. They did the exact same things, reducing the amount that they need to keep on hand. And what happened? Obviously, we had a major crash that occurred back then. The exact same thing happens every time. It leads up to every single financial crisis. Whenever they get more and more risky, they have a crash. And I'll show you that in a moment. Let's get into this first. The wealth gap between upper and middle income households at a record high. This is the US, and you see that whenever we have a crisis occurring, there is always a big divide in between the rich and the poor. These are the statistics that you need to see. Whenever somebody wants to deny the crisis, they can read these statistics and realize how bad things are. So we'll move on right here to the subprime mortgages. You all know them. You know how bad they can be. This article is out of Bloomberg. Subprime angst fades as crisis era bonds show a 12% return. I can't believe that any company would actually want to invest in this. This is the worst of the worst garbage that was in fact rated at AAA because of the collusion between the rating agencies and the government and the financial industry. Remember when nobody wanted to touch US subprime mortgage debt? That's just a distant memory as it delivers some of the bond market's best returns. That's how desperate they are to find quote-unquote assets. These investments, as they call them, are nothing but garbage. The securities that were created in the years before the financial crisis in 2008, which marked the last time they were issued, have gained almost 12% this year. These shouldn't even be legal anymore, but in fact, they are doing well. We saw what happened with Fannie Mae and with Freddie Mac, and this is going to be just another bubble expanding. I wrote about it in my book, and we're talking about what I call the alphabet soup of trash. Houses were purchased with a wide range of mortgage types, which could all be considered literally garbage. Some of the names are subprime, interest only, ARM, which is adjustable rate mortgages, and Ninja, no income, no job, or assets. The point is that the financial institutions handed out loans to people who should never have been given anything. You saw people who couldn't get any credit with multiple homes, and they believed that this could continue on simply because housing prices always increase. And we saw the failure of that. And then Fannie Mae and Freddie Mac literally went bankrupt, and the US government had to be there to step in and pick up the tab. We're going to move on to this. Japan approves $29 billion spending package to boost the economy. This is out of Bloomberg, and they said Japan's government approved a $3.5 trillion yen fiscal stimulus package to boost the economy after April's sales tax hike caused consumption to slump. So, of course, they increase taxation, and then the economy begins to slide. So instead of decreasing the taxes, they don't want to admit their fault, so they just print up money and stimulate it. This is what the US did, and of course, we saw what happened. You see an increase in inflation in food and electricity prices, but of course, nothing has been fixed. Japan is definitely the center of all of the QE and stimulus packages, been doing it for decades, and nothing has been fixed. We have covered this on this show right here, and we see it getting worse and worse. It is very, very unfortunate to see the failure before our very eyes and see how they're not fixing it at all. And again, another government that doesn't know what they're doing. Insurer, that got a $145 million loan under Obamacare, is almost broke. This article again is out of Bloomberg, showing you the failure of the US government and Obamacare. A startup insurance company loaned $145 million by the U.S. government under Obamacare is running out of money and being taken over by state officials in Iowa. Obamacare is definitely a failure. We see that is doing nothing but siphoning money from the individual taxpayer, causing, I believe it was 21 new taxes on the individual citizen. And here they are going bankrupt in this case, and the U.S. government is there to pick up the tab. This is definitely not going to work out. We see how this is just like what happened with the housing crisis with Fannie Mae and Freddie Mac, and we're talking about trillions of dollars being forced onto the back of the U.S. taxpayer. This is going on in Japan. It's going on, in fact, in most countries around the world, and it is only going to get worse. Things are getting bad. We can see how the reserve ratios are declining. We can see how they're getting desperate with all the different investments that they could be getting into, rating AAA things, which are actually garbage. We know that this is about to fall. I hope that you found this informative. If you did, please give me a thumbs up. I really appreciate it a lot. And don't forget to become a subscriber on here. It is very important to get on here, get the videos every time I release a new video, practically every single day. So please, I hope that you'll join the other approximately 12,000 subscribers. And of course, don't forget to become an insider. The Insider is where I give out all my best intel for free. That is available at themoneygps.com. Scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.